Hello guys, glad to have you on board again today. I've been starting to coach a friend of mine who just wants to get himself into speculation and finance tough world. So obviously, lucky him, he can come to my place and talk to me directly, so you can have much better advices than broadly speaking to you guys that I don't know from most of you. But I still intend to meet with you guys at some point. I still remember that I'm traveling a lot, far less right now that I'm a dad. But obviously, I'll start traveling again when I'll have time to do so. And I really want to meet with you guys. I mean, I know you're spread all around the globe. Therefore, I cannot necessarily meet every single one of you. But if I get to come closer to you, then you can, of course, if you want to. I'll let you know every time I get to travel. So if I'm coming close to you and you want to meet, you just take your car or a plane, or you come to me and we can meet with a lot of pleasure. But anyway, that set aside. So I'm coaching this guy, and basically I figured out something pretty interesting. Those of you who are following from quite some time may remember a moment in which I started to make a few analyses, just deleting the prices. I know how funny this sounds. It's basically making a full analysis of prices, not even having the prices themselves on the chart. So back then I done that just for what's more likely to just have some fun. But I kind of figured it out yesterday when I tried to teach him the basic technicals. So basically reading the PDF manual. And by the way, the PDF is going to come over hopefully by the end of that week. My fellow French guys and bilingual users are still working on that translation. So I don't want to give false promises, but eventually by the end of that week or next week should be absolutely expectable. So you'll have a fully featured PDF basically covering all the essentials you need to know regarding the strategy, plus a decision-making diagram. So really it's going to be, I think it's really great help for those who are learning the strategy. And so I tried to teach him this, the basic and the core information he needs to know in order to trade. And what I basically figured out is that he really well understood the rules, but it was facing a single problem that was just coming all over again each and every time I just switched the assets to force him to analyze something else. It was just like blurred. It had a blurry vision just because he was focusing on prices. Even though I clearly told him prices that doesn't price in context are just price you don't give a shit about. But even though he knew that rule, and he really got the point of this, the first thing he done anytime he had to look at a new chart was watching for the damn prices and trying to figure out that noise, which is the worst case scenario, because first of all you need to see the big picture, not even looking at the prices themselves. So I just said, okay, you know what, I'm going to try that. We're just going to delete the prices and see if you're better at analyzing the context. And guess what? It was pretty damn better when he didn't see the prices. And it was stunning to see that. I basically taught him a few hours ago. I mean, he didn't know anything about my strategy 2 or 3 hours before we met. I told him the basics, how to identify each and every context, pure and simply just get those rules, learn them, and now let's see how you apply them to identify a context. We're talking about somebody who's never been trading. He knows the basics about investment and things like that, so he's not necessarily an investment noob, but he doesn't know anything about speculation, and he basically never traded a CFD contracts, never took a short entry. So yes, it's definitely starting down the stairs. It has to cross all the steps, but definitely after just a few hours, a few information, it was able to do something that most traders, some guys who are trading for 3-4 years, not even know how to do, assessing the fucking context. It was able to do this, and pretty well, because I didn't just choose the single and the easiest assets to analyze. I started easy, obviously, and I raised the level, but it pretty damn had a decent amount of good pick from context, which is really key element to really understand how to speculate on the market. Because if you don't contextualize the trade, then basically you're just going to do nothing. A strategy cannot work the same in a trending situation than in a ranging situation. It's definitely two boxes in the same big box that we call the strategy. So anyway, by deleting the price, I sharply improved its reaction to analysis and odds for him to pick a rational decision in the end. Okay, yesterday we just focused on assessing the context, and he managed to do this pretty fucking well after a few attempts, and he done really well, really better not seeing the prices. So we're going to try doing that exercise today with all of you guys. We're going to do an entire video without showing prices. So first of all, how do you do this? You know, I'm sharing a template with you, which is this one, which I call the Pro Indicators Trial. So normally this one is open, which means you can copy these charts and make it yours, only for those who have pro versions of TradingView. Those who have the core basic free version of TradingView can't do that, but you can just replicate. I mean, that's simple. This is how you're going to do this, okay? You start using this. I suggest you switch to hollow candles, okay? And okay, so you switch hollow candles, and then you double click on prices. Mines are already invisible, and what you do is basically switching all those values. You turn down borders and wicks, and the candles themselves, you choose whatever fucking color you want, and you just turn it to transparent. And therefore, the candles just disappear, all right? The price is still there, and it has to be, but it's hidden, so you don't see prices. When you want to see prices, you switch back to normal candles, but I suggest when you do the first glimpse of analysis to a chart, before having a look at the damn prices that doesn't even matter, you just hide the fucking prices, all right? Simple as that. Normally, just the informations you have in here must show you where the prices have been, but the prices that matters, and you just filtered out all the fucking noise that can just narrow your vision or fool your decision-making process, because you focus on prices instead of focusing on the prices movements and the prices area that matters. And it's simple as that. I mean, in here you can clearly see that, okay, you've got some bullish targets, so definitely something has been happening in here. Okay, as you said, market has been pulling back and probably has been pulling back to Fibonacci retracements, and now we're just cracking and extending. Okay, so you can see the acceleration, wave 3, kind of a bearish trend, so wave 3, and this is definitely wave 4 and wave 5. So we are late stage trending to the downside after major trending to the upside. So definitely, okay, bubble, burst, bear trend, support findings, so we're ranging in here for a bit, and then bullish trend should be restored, or at least we should get back to trading into the Fibonacci, into the bearish context, just to assess if we still have bears. It's simple as that. The market is kind of searching ground basis. It's oscillating between support areas and resistance areas. And when we go support area, we're looking for buyers. Either they will show up and they will support the trend or the range, or they will not show up and we might have a bearish trend to emerge. This is exactly what's been coming in here. We're going crazy up. We tried to find some support, didn't, so bearish trend is ongoing so far. But in here, we're finding support. We have late stage trending. So first thing first, we're going to oscillate in here and build a range. How do you neutralize a bearish trend? You target the damn Fibonacci retracement. I mean, when there is nothing else to trend for, we just first deteriorate the trend by retracing to its Fibonacci retracement levels, and then we're testing the bears. So to me, it's just a matter of assessing the Fib retracement until we manage to get to the bearish context in which we're going to test the bearish resilience. So it's kind of a binary choice in here, but in the long run, I still don't know how, but normally we should get to test the bearish reactions. And whenever we'll cross the bearish context is where the decision-making process, the long-term decision-making process will occur. In here, either the bears are holding it, they are selling once again, and this thing will probably worse shit in the end if we get to make new lows, or risk management, pullbacking, and fucking it up. All right? That's a possibility. I still favoring this one, buying until then, letting it go for a few months, and then buying again on support. So two decision-making areas to me, in here and in here, because that's simply a damn range strategy. And then I'll get to profit take number one in here and profit take number two in here. All right, so I'll get in detail, but just to the goal in here is to show you that prices or not, I'm always getting to the same conclusion. For now, we're trying to find a ground basis to start some retracement. The first retracement is going to be 14.6 and it's $280, but definitely not the price we may stop down to. I think we may target up to the next one, which is 400. It's call that an intermediate resistance. All right, so in here is definitely going to be a profit taking number one upon signal only, and definitely we go there, you profit take, and you don't even give a shit about forecasting any more prices rising. In here it's too risky to remain bullish, even if prices manage to go up to $750. We can go there, but who gives a shit? You already taken a pretty damn good return on investment if prices manage to go there, which is still uncertain at the moment. What we need to do in here is to fuck up the bearish trend. So the validation in here is whenever we'll manage to rise this and reverse the bearish trend channel. For now it's bearish, but that's simple as that. What are we going to forecast? Think rational. What we do is the market doesn't know where to go. It's just going to test bullish and bearish resilience every time and oscillate in between. All right, so we've got a pretty damn bearish trend, which means the bears have been holding the power for way too long, and now they're losing strength. So when they're losing strength, what are we going to do? We're going to test ground basis. We're going to return to neutrality. Now translate what I said in terms of technicals provided by the indicators. What is called neutrality? It's the damn fucking 50% trend channel, context channel. So we're definitely going to go there, either there or there. I don't really know. All right, but I think this is definitely the area in which something may happen. This is the target area. All right, it's something near this area, and I'm definitely targeting this Fibonacci or this one, and I pretty damn think that this is what's going to happen. We're going to forecast those prices. I don't know which one. The market could very well surge to 400 without problems, but I still tend to believe that normally we will go slowly, because that's how the cryptos manage to do. First tiny wave 1, wave 2, and big 3, okay? So I still tend to forecast that this one is an underlying intermediate resistance that we're just going to fuck up in the FOMO final wave. So we're not going to spend 1 full hour in here. I'm just going to make it quick, but we're just going to review all the major scenarios that are still trading into speculative areas, and just try to review all of them without the prices and see if we get down to the same conclusions that I do have when I see prices. So in here the conclusion is really well that I want this to reverse, and anytime this will be bullishly oriented, it should probably push prices back to 50% context channel, and in a later stage probably right to the context, resistant context. Now let's have a look at yen dollar index. So we're gonna go there and see what we have. Okay, so just once again, no prices. All I have is the current prices in here in that dark line or black dotted line, the fibs in here, and my context channel and trend channel, and I've got more than enough to assess what the hell's going on in here. So I'm just trying to identify some kind of context. All right, so in here we can see a major scenario in here, major thing, definitely has been a trend in here. All right, let's have a broader look. Okay, so in here I'm just trying to figure out what the hell's going on. Okay, I know what's going on with the prices, but the goal in here is to do the job with a no bias perspective. Okay, starting all over again, and the structure in here seems pretty well identified. It's in 2 sets of waves, so it's a big range, but it's a bearish range. Okay, we see always 2 sets of wave, one side and to another. Okay, but always heading lower, so it's a neutral, it's a bearish range. Okay, it's a trend range that goes 2 sets of waves, always heading to the downside. All right, we've made the 2 sets of waves to the upside, and therefore we can forecast to make a 2 sets of waves to the downside, breaking the previous lows. So I still go to the same conclusion. That's for the weekly, okay? Because in here we're trading near the context, but still not yet into the context, but we've done previously. Now go daily chart. We've got a major trend scenario, so we're looking at consolidation before heading lower, all right? So the market top didn't occur in here, actually occurred there, okay? As we got a little bit higher, let's just forecast if price is done. Yes, they did, all right? So what we're doing right now is pretty much this, okay? We've gone bearish. We need to see this as a bearish impulse. We clearly can see that, the breakout area, pullback, end of trend. So it's definitely down, down, down. We've got the trend, okay? Probably a side wave one have been occurring in here, the accumulation. Okay, so we've got everything we need in terms of structures to fulfill what we're looking for. So wave 1, 2, 3, 4, 5. Okay, 1, 2, and we're looking at 1, 2, 3, 4, 5. Okay, so definitely in here, same conclusion to me. What the thing is that normally we should break down to those lows, which means as we are bearish ranging in the weekly chart, the daily scenario must break this down. So in that next perspective, the goal is to fuck up these lows. Okay, so to go in here and then 2 sets of waves to the upside, right? Making lower high until further notice. Maybe someday we'll manage to make a high. I don't really know about that. All I know is that for now we keep on following the same trend until proven wrong. So we're assessing that we're going to target new lows, and we're assessing to do this in 2 sets of wave. The first of them has been done already. We're still looking at consolidating to get to the next one. So maximum stop loss in here. You cannot put a stop loss ahead of that. This is where you get the hell out. If you want to be more aggressive, then obviously they're going to be more aggressive risk managements, but you cannot set the stop loss further away than there. It's the maximum stop loss if you're playing daily, and you can put intermediate stop losses, of course. We can see that the 2 sets of waves have been done, and we can also see that we've been fucking up the second wave already, as the trend channel in here has already been reversed to the bear side, which means the bears are now probably in control of this short-term trend. They will probably try to deteriorate the main trend, the context trend, okay? So this is it. I still tend to believe the next move for the dollar is to go test this and try to reverse it, then neutralizing a bit, pullbacking, kind of wave 2 pullbacks, and then trending. And we're probably going to trend this trend line. Okay, for this set of wave, we're going to manage to build a resistance in here, still pending at the current stage, but we've got decent odds as the bears have already took over on the short-term trends. Probably going to test the long-term ones, then pullbacking, digesting without breaking the highs, and then trend will probably emerge. Simple as that. Normally after that trend, we can generally use the parallel thing, which means we can very well assess something like that to occur. Okay, getting in that channel, and the extended wave will break it to the downside, profit take, end of the game. Simple as that. It's not magic, it's just that this is how I work. I replicate strategies through time, and I very well expect that we're going to have a wave 5 extended trading in here. It's hard to say how much we're going to pull back. It's just forecast that a set of waves is going to look like that, and the prices will just jitter in between. Okay, it's just I don't know how long those waves will take, how deep they will go. All I assess is that normally prices should oscillate 3 times to the downside. That's all we can tell, because that's how Elliott wave strategy works, and it's a pretty good strategy. It's just, you don't have to use just Elliott wave. It's just something that can pile up on top of others to assess the way we may get to things. All right, let's do the same exercise with the yen index. Let's just delete all that shit. I've just done that for the French users, so I need to start it all over again. So same thing goes in here. Okay, we're assessing this thing. What is it? Big major, big bear move. Okay, so we got bear trend going on in here. That's the major move. We're going to contextualize that major move to just make sure it is something that matters. Don't have enough history here. So major bearish move. Okay, so the major trend is bearish. You can definitely see the trending scenario in here. Wave 1, 2. Big and very long wave 3, wave 4 and 5. Okay, so in here, very long set of waves. Very overextended, so this is definitely the major move that's going in here. Okay, so now what we're doing is digesting, we're consolidating. So how far have we been consolidating this? Because let's go weekly, we're gonna have the fibs. No, we don't. So let's go monthly. All right, there we got the fibs. So we're gonna just put those fibs in perspective. All right, definitely we're gonna have a profit taking area in here. Let's have another one higher than that. Profit taking number 2. And maximum profit taking in here at 61% retracement. We're obviously not gonna target any further than that. And returning to our daily chart. So what we need to do in here is forecasting if any of those targets has been reached out to. Okay, so first target done. Okay, so first level of retracement is cleared already. Okay, so this one not viable anymore. We're not going to stop to the same price level. Okay, we're just going to go weekly chart again for now. Just deleting the prices. Okay, so as we said, we need to have 2 sets of waves to the upside. We're already cleared first target, so the next 2 targets are in here and in here. All right, we can see in that structure that first set of waves been done. Okay, so first set of bullish consolidation. We're still consolidating in here. Kind of looks like a triangle. And then a second set of waves should get next to target number 2 or target maximum before going bearish again. Okay, so that's what I think is the most probable. So for now, we're going to validate this, see if I've been right or wrong. I know I'm right in here because I've done that for the French, but I basically come up with the same conclusion. Let's show up prices. We definitely have that triangle going on. It's very visible. Okay, clearly we're rejecting in here and we're trying to support in there. It's purely and simply this. So we're waiting for this apex. So we're trading very uninteresting prices right now. We just wait for a bit more consolidation. I think a little bit lower prices, but that's going to be the final set of wave. A, B, C, D, E, and then trend. Okay, that's normally how it should play. So we're final set of consolidative wave for the yen before trending for probably, for probably 20%. So 20% move of a currency is definitely something. All right, and remember the last time the yen has been bought for 20% is when we've got the damn Chinese crisis. So you can expect some kind of crisis to show up, at least some risk management and some risk off mode, not buying risky asset anymore, and it's just in conjunction with everything else we've said. The volatility pickup is a structure that will not end well, at least not until further notice. Same thing goes for the gold. They'll have a short-term bullish structure until proven wrong, even though the overall thing can be bearish. The dollar seems to be bearish. And what the fuck, how do you think this is going to be bullish for the US stocks? Yes, still people still tend to believe it is, but that's how it goes. I mean, I'm here to assess odds, not to magically forecast the future. So now let's do this job with other assets. Let's do that with Boeing. All right, so I'm going to just delete the stuff in here. As you can see, all the conclusions have been going down too. I will get to the exact same conclusion that we're building an expanding wedge structure, and that we're doing this without seeing the prices. All right. So in a weekly chart, what's the context in here? Noobs are not trading anything like that. It's not possible. Context boxes are freaking unfolding each other. So you're absolutely not trading this unless you have at least 3 years of trading experience. Unless you're just going to get fucked up, because it requires a very sharp psychological behavior, and obviously all the beginners in here won't be ready to be sufficiently enough resilient or patient to figure out the gains in here, and they'll probably end up losing some money stupidly because of lack of patience, lack of resilience, and lack of strategy application. So in here, not tradable. So the weekly chart is definitely something that only professional can trade, and definitely looking at the structure, this is just a fucking bubble. So I apply the bubble trading strategy, which means I wait for the prices to stop, and then I'm looking at selling entries, and I replicate this as long as prices doesn't prove me wrong, doesn't prove me right. Okay, anytime I'm proven wrong, I don't give a shit. I give away the stop loss and I try again the next time. So we need to wait for prices to stabilize. Definitely not possible in here. Oh gosh, we've got something good. Boxes are falling one to each other again. And we can look at the underlying price structure. What we can see in here is that the context channel and trend channel are following one to each other, definitely showing signs of high level of volatility in a range. Okay, which means the trend channel doesn't have enough time to follow the prices, and it's just prices oscillating between bullish context and bearish context and just fucking up whoever is stupid enough to trade in between. So it's definitely there. We can clearly see the price structure. Okay, it's simple as that. It's 1, 2, 3, 4, 5. Okay, we can clearly see this. We've got an underlying starting structure in here that says this, and this. Okay, so you can clearly see this expanding wedge. You can clearly see that we're fucked up to the bull side, fucked up to the bear side, and now we're trying to fuck up to the bull side. So definitely something I would like to see as a bear to short in here and see if obviously we're going to crash this market or not. If we crash it, definitely want to be among those who sell. If we go crazy bullish, then I'll be out and try again the next time. Okay, so same conclusion. We can see the expansion. We just look on the price and you can very well see the old same trend line. Okay, so it's definitely expanding wedge structure. Either we fail in here and we're good, or we don't and we go once again crazy bullish highs. Same kind of things to be expected. Parabolic move, and then anytime it ranges, bearish again until we crash this thing. All right, all it says is that the pricing in here is irrational. Okay, this is no pricing. We're not pricing things. No catalyst on earth can justify such price movement. So it's just overexcitement about profits, magical profits that generally not gonna last. So it's definitely the context in here. For Boeing, we're expecting this pace to last forever, but this is not sustainable. When you have that kind of pricing, you just know nothing is going to handle this forever. It's just stupid pricing, speculative prices of people jumping in just to sell at higher prices until no one buys, and it's a fucking Ponzi scheme that collapses because it cannot do any different. It's not sustainable through time. So anything that is not sustainable just go crazy high, parabolic scheme move until we lack of buyers, and then obviously absolutely no buyers in a market that has been pricing stupid prices. What do? We return to the mean very brutally. That's exactly what a crashing market is. And after retracing very brutally, you're going to have to suffer side effects, which we call a crashing valuation. After rising too high, flying too close to the sun, you burn your wings and you basically crash down to the floor. Let's do this with another asset playing speculative area. The US stock market. Let's play around with this shit and see if we get to the same conclusions. We're going to use SPX on the daily chart. Okay, I'm going to just delete that stuff once again and starting it all over again. So let's contextualize this shit. So weekly chart, unfolding boxes, professional stuff only. All right. So obviously, if you're a noob or beginner in here, you don't even try putting your minds ahead of that. Overextended trend with a bubblish ending. It's not going to end well, but still the same bullshitters out there who tell you the trend is still bullish until we fucked up. I mean, at what point are they going to say this trend is no longer bullish? When we're going to be on support and it's going to be tight to buy, they'll sell you, okay, we might have been wrong, the trend is eventually bearish, and that will be just the appropriate time to buy. So that's just as stupid as ever. Just don't listen to those guys. They'll just make you lose money. All right, so first set of wave, very low level of consolidation, obviously very bullish move, breakouts occur in here, definitely wave 3 of trending. Wave 4 pullback and overextended wave 5, in which we can see the jitters is starting already, so you can definitely forecast this to be the end. This is definitely wave 4 and wave 5 to terminate this wave. Okay, so in here we got everything we need to just do what? First set of waves, second, and normally we're going to break down this low before buying. Where is the low volume area? Definitely in here, so this is where you want to buy, definitely not there. So we're pullbacking, and guess what? how deep we've been pullbacking so far. We're already trading above 61% to 76% Fibonacci retracement. So this is the damn fucking dead cat bounce structure that everybody feel is gonna rise to the historical highs, even though it probably won't, and just fail once again. We're not trading the weekly context, so this is not the chart you want to trade. Remember that you always have to trade in context. In here, we're just trying to contextualize the market. So we're very late stage bullish trending. We've been fucking up that trend. We already have signs of reversal. So what we're doing here is trading bearish range, okay? Because we're ranging in here. Remember, we don't go bullish trend to bearish trend unless you have an excessive market. So are we gonna V-top reverse the stock market in the US? Fucking yes. Because of what? Because we've been overextending the bullish trend. So there is not going to be range in here. We're not going to go sideways action. We're just going to bearish range until bearish trending. That's simple as that. All right? And every indication you have in here just suggested it that way. So the weekly charts, we can trade. We're not yet trading in those bearish context, but we've got the information we wanted. We're neutral bearish trending. Okay? But it's a range, bearish range. Okay, this is what we had, and same signal in here should be really ringing some bells. You'll definitely not be bullish right here. We should be selling resistance instead of buying supports. You can do both, as it is a range, but definitely you're favoring selling than buying, even though the consensus think we have too much bears. I mean, that's silly, but that's how it is. So we need to assess price context in here, even though it's selling the prices. Well, let's be honest, I know about the prices anyway, but we're just trying to contextualize these things. So how far are we from those bearish waves? We're expecting three sets of bearish waves, okay, trending range. So 3 waves, just like a trend, but we're going to retrace anytime to the context. 2 and retracing context. So definitely having a third set of waves, then 2 and 3, okay? So still getting to the same conclusions without seeing prices. So all we need to have is prices in a context with a bearish signal in context. Fuck that. What else do you want? I mean, applying the strategy in here doesn't mean it's obviously going to happen. All it says is that this strategy is here to limit the risks so that in 100 trades with a similar context, you're going to take way better gains, way more gains than losses. You get odds in those situations, in that kind of context. Normally, that kind of structure will bring you 80 to 20 gain. It's 80 to 20% gain. We can very well end up in the 20% that will fail. That's a possibility. But if you just replicate the same decision-making process in 100 times similar context, you're going to get a lot more gains than losses. Simple as that. And anyway, in here, you're trading interesting prices. It's a selling area. We'll just see if some other sellers are here or not. We don't know what the other traders are doing. We're just here to speculate on what they're doing. All right? So in the strategy application in here, bearish context, bearish signal, trending kind of signal. I mean, the red signals are signs of trends. I mean, look at that. We've never had that kind of signals before. So it's the first time in a long fucking run that we have bearish signals after having pretty much always bearish, always bullish signals supporting this trend. Now we're having bearish signals and people think it is just wrong footing, that this is a bear trap. I mean, fuck that. I don't think it is. I mean, technicals are here to just delete all personal behavior and personal biases. Technicals doesn't have biases. They're just saying right here, right now, odds are for the bear side to be trending. The fact that we're retracing to the context means that the bears are not that strong. We're still having bulls fighting back in front of us, but we're winning the battle no matter what. The technicals are with us. No matter what the bulls think, they're losing it. That's how I get to, okay? So I still having the same conclusions in here. Let's go short term. Let's go 4 hour. But we're going to do this in the SPX, all right? We're going to go short term SPX trading because we need the futures in here. And we need to get to the same conclusion, okay? So we're trying to zoom in the price structure we had previously highlighted. So in here, 2 sets of waves. Okay, great. 2 sets of waves, probably 2 sets of waves in here. As we can see, we've been consolidating a bit in here before accelerating, okay? Same thing goes in here, consolidating and breaking up, so 2 sets of waves in here as well. I don't see prices, okay? So what I expect now is to fail in here, not breaking this, so stop loss is sitting there, and I expect another 2 sets of waves, breaking down the previous low and targeting the next support at maximum. Not targeting more than that. We can stop before that, no problem with it. It's just this is where I'm going to limit the trade and profit take no matter what. Okay, but of course there will be risk limitation in there. If I do have bullish signals on technical levels, I'll definitely profit take. But until then, and for now, I still tend to believe this is where we got the strongest resistance. This is where the bearish resistance context was back then, and we always failed to break through this. So this is definitely an area which you can put your stop losses in here and just wait for this to exhaust itself and reverse. That's exactly what I think. I don't give a shit how long this will take to work out this area, how volatile this area can be. All I can tell is that as long as we're here and as long as we don't break this, the bulls will just exhaust themselves and naturally the bearish trend will just emerge out of it. We're not bearish trending, which means it's a bulls and bears fight. Right now, the bulls are fighting, but they're exhausting themselves because they're late stage retracing and they still haven't broken through the major resistances. Therefore, it's a binary choice. Either they do, they take down my stop loss, and I'll have to change my context. And I have to find another context that suits the new rules. Or, I'm right, it's going to reverse, and I'm going to take gains. It's simple as that. All right? Either I'm going to take a loss, appropriate loss to the risk I'm taking in here. As I said, as I'm selling all the indices and major assets composing those indices, if we go there, and my stop loss is there, if we go there, it's a 20% drawdown I'm going to take. Massive drawdown, but it's in consequence to what I'm forecasting if we go there. If we do shitload and delete 20% and more out of prices, you can be damn sure that those assets will suffer a lot. So I'm going to take huge gains out of here, plus the reinforcements, huge takes out of here. You can pretty much expect I'm going to probably double the account sizing just on that single trade. So it might be the trade of my year. I'm not giving a shit on how long we're going to stand and remain in the speculative area. Could very well end up March, even April. I don't give a shit. We can range for quite some time. All I can tell is that I'm waiting for the trend channel to reverse, to start lowering. Normally we should fit that with the context channel rising again in here. So context channel should just rise a bit, and we're probably going to find some support in here, short-term support, build a higher low, and then trending. Okay, this is where I'll trigger the breakout trades, when we'll break down this context channel after testing it the first time. That's simple as that. First breakout trade, second breakout trade will be done in here when we'll fuck up the Fibonacci retracements. That's just as simple as that. All right? Can't do any better than that. I'm just trying to be honest with you guys. Prices or no prices, I'm getting to the same conclusions. Simple as that. So I'm going to leave you guys with that and just tell you what I had to tell you, which means be patient, be resilient, and just let it go with that market if you don't have those conditions. If you don't have those qualities, I mean, if you're impatient, if you're lacking of confidence, just get the hell out. I mean, look at this. As I clearly said, we're trading something that only professional and experimented traders should get themselves into. If you're not, you can very well learn a lot of those situations. You need to trade them, but if you do, just trade them with the lowest possible amount you can trade with your broker. So you're going to take the psychology, you're going to be probably wrong-footed, but you're going to learn out of those mistakes. It's definitely the most interesting area to trade in terms of educational purposes. So put yourself into a dangerous situation, even if you know that you're not mature enough to profit from this. All right? You're probably not going to take gains if you're a beginner. Here you're probably going to take more losses, but you're going to gain something way more valuable. You're going to gain experience. So trade that, even if you're not experienced. But if you're not, you do that with the minimum available leverage of your broker. You're not even trying to make money out of here. You're probably going to lose money, but you're going to learn decent and pretty important information. All right? But if you do play anything different than that, meaning unexperimented and wanting to make money out of here because you think Phil has been really get it, he's identified the thing, I just want to profit from that, No, god damn it, you really have it wrong. Why? Because I have the psychology to handle my trades, you don't. Meaning you're going to make mistakes and you're going to suffer from those mistakes. And if you do that with a little bit of leverage, it's going to be costing you a lot. And if you do that with a minimum leverage, it may not cost you that much and you'll be able to handle this. And the information you'll gain from this will be way more valuable than the $50 or $100 you could lose in here if you do some mistakes. And believe me, you probably will. Because the market is here to push you doing some mistakes. It's going to force you to overtrade. It's going to show you a lot of bearish signals and you're going to be forced to trade most of them, even though you should just fucking wait. That's simple as that. Don't try to pile up entries. Just wait and manage the risks of the trades you have already opened, if so, or wait for trending signals if you're low risk profiles. Simple as that. Anyway, you're going to stick to this to avoid making a 1 hour long video today. I see you guys again tomorrow to terminate that week. In a short-term perspective, so 15 minutes out of the SPX, let's just do the exact same job and see how it comes up with. Alright, so 15-minute signal, very late stage trending. So, sorry, we need to contextualize this thing, so go 1 hour. So we're just going to do 5 minutes to terminate in here to do some intraday trades. Some intraday contextualizing. So, okay, look at that. I mean, we've clearly said, okay, what we've said earlier, first set of wave, we probably have an in-between scenario in here, and the market is reaccelerating in there, second set of wave, okay? That's exactly what we have, okay? So, two sets of waves, even though how trending this looks like, it isn't. It's just an ABC correction, and we need to find some suitable sub-wave count in here. So to me, the sub-wave count in here, 1, 2, 3. Can definitely see breakouts in here and trending. So this is wave 3. Pull back to wave 4, overlapping, and wave 5. So late stage trending of a late stage consolidation. So it's not about time to buy, it's more about time to sell. And this is the expanding wedge I've been forecasting, so we can definitely expect that we're doing the final sets of waves, or probably just one more, and then we're down. Okay? So wait for this to come. And in that perspective, 1 hour chart perspective, we're definitely in a selling area. I would say the stop loss must be set a little bit higher than that, but anytime we get to this support, is going to be confirmation of my trade and the fact that the market wants to reverse. So 15-minute support, context has to be reached out to sooner or later, and whenever it will, anytime we go there, it's a validation to me. We can clearly see the low volume area in there as well, so definitely is where the decision making process is. Anytime we go there, means the bulls have lost the strength. We may range a bit, but the odds will start reversing to the downside afterwards. So first set of validation. In that wave, we need to forecast how mature we are. 1, 2, 3. You can clearly see the wave 3, breakouts, everything. Pull back in wave 4. There's still probably a little wave 5 to make, which is going to show prices. Oh gosh, how complicated is that? It's not. It's simple as that. We're overextending. We're going to try expanding today probably one more time to the same old fucking trend line, and it's a big sell to do today. So for those who don't have already selling, for those who haven't sold yet, you can definitely take a sell today. Out of that condition, you wait for us to reach out to context, you wait for a bearish signal, and you wait to trade close to the trend line, and it's definitely the final set of waves we should have. The objective right after to confirm the trade is to get back to support area, to confirm the fact that the bulls are really losing the strength, and then you wait for the range to build up, to deteriorate, and then slowly but steadily, we're going to reach out to the lower context. First 1 hour context, and then 4 hour context, and then slowly but steadily we're going to grind our way down until we restore the trend. Is that complicated? No, but definitely I think most of you guys will have a much better understanding of the market's behaviors by just hiding those prices. Don't forget to have that switch. In order to do so, you just put a favorite on those two, and you can be able to switch. Hide the candles, show the candles. Okay, before taking the trade, make sure that what you've been forecasting in terms of price movement has been followed through. Right? You really need to confirm that. Normally, the trend channels will always follow the trend. So normally you should have the same behavior, but at some time to time, on some jitters, you may have some volatile prices, and you just want to make sure that you haven't missed something. Just kind of a final verification. All right, call it that way. But most of the time I suggest beginners and at least unexperimented traders, so anybody who has less than 3 years in trading, I suggest you just delete the price. You're going to have a far better analyzing bias, at least far better analysis by deleting the biases you may have, by wanting to first analyze the price themselves, as most of the price just doesn't matter, and just the indicators will sum up the core informations you need, help you contextualize the market, and making a rational decision. Bye guys, see you tomorrow.